How much higher can we rise now that we're in, according to your analysis, a surplus, and that should drive the bull rally higher? What is your price outlook for the end of the year and into next year?
We think that the price is going to tread waters right now. I wouldn't be surprised to see, strength in the end of the year, and I wouldn't be surprised to see the price somewhere between, say, $27 and $31, $32, with an average price probably just a little bit below $30 for the fourth quarter. Next year, we see the price moving modestly higher. And then beyond that, we expect another global financial crisis, another recession, a lot of the economic and financial problems and political problems that we face today will be 3 years worse. And we'll probably see a wave of investment demand that will push the silver price higher. We're not looking for $100 silver, much less $1,500 or $13,000. But we do see the price able to go to record prices on a spike much higher, and on an annual average basis, probably north of $50.
Why didn't we see the spike above $50 last year? Gold hit its all-time highs. Why didn't silver?
Because there's a lot of silver around, and gold is more universally seen as a financial asset and a safe haven asset. So when we got into the pandemic and the economic lockdown and the recession, there were more people moving toward gold than were moving towards silver. And the gold market is much more resilient. As I said earlier, if you look at bull and bear markets, in the gold market, in a bear market, investors tend not to sell their gold, they buy less gold. Investors hold on to their gold much more readily. In the silver market, investors are much more willing to buy and sell silver. So you have long periods of time when they're net sellers, and you have large periods of time when there is enormous gross sales. In 1997, when Berkshire Hathaway was buying 127 million ounces of silver, we have like a 150 million ounce deficit. So investors were selling 300 million ounces of silver that year, even as he was buying all of that stuff.
Okay.
And you saw that last year too. There were any number of investors who said, oh man, I've been holding this stuff at $14 an ounce because it was 50 and somebody told me it was going to go to 100 any day. I can get $30, take it, please.
Sure.
And that put a cap on silver prices last year. If you're looking at copper or steel or aluminum, deficits drive the price high because those are industrial metals. If you're looking at gold and silver, surpluses drive the prices higher, because what the surpluses are, if you look at these things, you can see the big bar in 1980 is investment demand buying, more than 200 million ounces.
Okay.
The primary people buying that surplus are investors. Surpluses are created in gold and silver when investors come into the market and bid the price up, increasing supply and decreasing fabrication demand.
Okay.
So in gold and silver, surpluses are bullish for the price and deficits are negative for the price. And you don't really have, if you look at gold prices, the gold balance since 1966, you've had three small deficits. The gold market, when investors are bearish on gold, they don't buy as much gold. When investors are bearish on silver, they sell it. So if you look at this chart, you can see big period of time in the 1970s when investors were net sellers. These were investors who had bought silver at $1.75, $1.29 in the 50s and 60s. And when the price was freed after 1967, the price went up to $4 or $5, and they were sellers. And they were sellers through the 70s. Then the price of silver started rising along with inflation, gold prices, copper prices. A lot of people blame the hunts, but the hunts were just riding that wave. And if you look at it, inflation was 14%, gold prices went from $200 to $850. You can't blame the hunts for all of that. The hunts were riding that wave. And as that price started rising, investors poured into the market. And actually, in the peak year in 1980, they bought 200 million ounces of silver, driving the price to $50 briefly. And then it came down, and it averaged, I think, about $16 that year, or maybe $20. So you saw investors then were net buyers from 1979 into 1989. By that time, the price of silver had fallen to $5, $4, $3.50. And investors said, not only am I not going to buy as much silver, I'm going to sell. You entered this 15-year period of time when investors were net sellers of silver. And they sold more than 1 billion ounces of silver over that 15 years. By 2005, 2006, the world was changing. Commodity prices were rising again, not so much silver, but gold prices had bottomed out in 2000, 2001 and started to rise. Oil prices were rising sharply. Copper prices were rising sharply. It was the commodity super cycle according to the marketing hype, right? And people started coming back into silver and they became net buyers again. They pushed the price up to $50, and then they pulled back.
Well, the market balance remained elevated all throughout 2011 to 2015, 2016, yet the price declined significantly. Why is that?
Because the market balance went from 150 million ounces a year to 40 million ounces a year. So investors were buying less than a third as much silver as they had been buying when the price was high.
Sorry, I was looking at from 2011 when gold as well reached a peak in 2011, and then it fell. According to your chart here, the market balance remained elevated for a number of years while the silver price declined. I guess, look, over the long term, there's a correlation, but I guess my interpretation is that, if you're looking at it just over a few-year time interval, there could be divergence.
Yeah. If you look at it in 2012 and early 2013, investors continued to buy silver the same way they did in the early 1980s.
Yeah.
They had seen the price rise to 50. The price was at $36 in April of 2011. It spiked up to 49 something in April of 2011, and then in early May it fell back to 32. And a lot of people said, okay, that's over. But a lot of other investors said, oh, well, it went to $50. It's going to go back to $50. Or worse, they were saying, I'm listening to this guy on the internet who says silver's going to $100 or $1,300. There was one guy in the market in 2011 who was saying that the price of silver was going to go to $1,500 within a short period of time. A very highly respected and followed newsletter writer on gold and silver. The world's going to collapse and silver's going to $1,500 an ounce. He upped his game, and in 2015, he said it's going to $13,000 an ounce within the next 5 years.
This is U.S. dollars.
Huh?
This was in U.S. dollars, not yen.
Yeah. And there were any number of investors who continued to believe that stuff 2012, 2015. But as time progressed and the price was coming down, they said, wait a second, this is a similar situation to what we saw in the 1980s. And so you saw investors progressively buying less and less silver until last year when they started to buy again.